Welcome to The Explainer. Today, we're going to take what is maybe one of the most complex looking indicators in all of trading, and we're going to simplify it down to just a single line. And this one line is so powerful, you can actually use it for super fast scalping and for those longer term swing trades. So let's get right into it.
Okay, so here's our game plan. We'll start by tackling a huge problem that trips up so many traders. Then we'll decode the Ichimoku cloud itself before I show you this super simple one-line setup. After that, we'll see it in action, first with scalping, then with swing trading. And we're going to wrap up with what is, seriously, the most important trade you'll ever make. All right, let's just dive right in with a feeling I bet is familiar to a lot of you. That feeling of being totally and completely overwhelmed by your own charts. I mean, be honest, take a look at your screen. Is it just packed with indicators, lines, oscillators, all kinds of stuff? If you find yourself staring at it all and feeling more indecisive than clear, well, you're probably dealing with a classic case of analysis paralysis. You know, traders love to pile on all these popular indicators, right? We're hoping they'll confirm our ideas. But what happens when they start giving you conflicting signals? Your RSI might be screaming sell, but your moving averages are pointing straight up. And the result? You freeze, you do nothing, and the opportunity just vanishes.
So, what's the solution here? Well, today we're going to turn to a tool that is famously comprehensive, but let's be real, it's also famously confusing, and that's the Ichimoku cloud.
You know, the Ichimoku system, its name literally translates to one-look equilibrium chart. It was designed from the ground up to be a complete trading system all by itself. It's supposed to give you everything you need, trend, momentum, key levels, all in a single glance. But here's the catch, right? It does all this with 5 different lines. You've got the conversion line, the baseline, a lagging span, and then 2 lead spans that create that big iconic cloud. For a new trader, or heck, even for an experienced one, this can just look like a total mess. But here is the key to this whole thing. What if we could just strip away all of that noise? What if we could take this super complex system and boil it down to just one single powerful line? Well, that's exactly what we're about to do. Okay, let's get practical. I'm going to show you how to build this incredibly simple setup on your own charts, and it'll only take you like a minute or 2. It really is this easy. Step 1, add the Ichimoku cloud indicator to your chart. 2, pop open the settings. 3, just start unchecking boxes. Turn everything off. 4th, the only one you're going to keep checked is the conversion line. We pick this line because it's the fastest, it's the most responsive part of the whole system. And now for the final and most crucial step. Change its length from the default of 9 over to 18. This just smooths it out a little bit, enough to cut down on market noise without making it too slow. And that's it. Your chart is now clean, it's simple, and it is ready for action. So we've got this one line on our chart. How do we actually trade with it? Well, let's start with a really fast-paced style. Scalping, where we're just aiming for those small, quick profits. So let's take a look at a hypothetical day of trading the nifty index on a 5-minute chart, just to see how this whole thing plays out in the real world. The rules here are just beautifully simple, and they're perfectly symmetrical. To go long, so to buy, you just wait for a price candle to close clearly above our line. That's your entry. You then stay in that trade until a candle closes clearly back below the line. To go short, you do the exact opposite. You wait for a close below the line to get in and a close back above the line to get out. Simple as that. And just look at how effective these simple rules could be. On this one day, the strategy gave a long signal that could have captured a 30 to 40 point move. Then later on, when the trend reversed, it signaled a short trade that could have brought in around 80 points. 2 super clear signals, 0 clutter. Now, what's really cool is this strategy's flexibility. That's one of its biggest strengths. We don't have to be glued to short-term charts. We can actually apply the very same logic to longer-term swing trades that might last for days or even weeks. So to adapt this for swing trading, say on a daily chart, we're going to add one simple filter. This is just to reduce the noise and avoid getting faked out. Instead of jumping in on the very first candle that closes across the line, we're going to wait for 3 consecutive candles to close on that side. This gives us a much stronger confirmation that a new, more durable trend is actually starting. Let's look at an example with a stock, BDL. Using our new 3 candle rule, an entry signal could have shown up right around the 520 price level. And then, by just holding that position as long as the price stayed above the line, a potential exit could have come around 596, maybe 2 weeks later, capturing a really solid 76-point move. So, we've looked at the problem of chart clutter. We built a simple one-line solution, and we've seen how to apply it to two totally different trading styles. But believe me, this last part, this is the single most important step in this entire process.
The person who originally shared this simplified strategy also shared this vital piece of advice, and honestly, it is the absolute golden rule of trading. No strategy is a magic bullet, and you have to remember that what works for one person might not work for you.
You know, your long-term success as a trader, it's not going to be defined by any single buy or sell order you ever place. It's just not.
It's defined by the work you put in before you ever click that trade button. That means doing your own research, it means backtesting the strategy across different markets, different timeframes, and building that unshakable confidence in your system before you put any real money on the line.
Look, the goal isn't to collect a dozen different strategies that you barely understand. The goal is to find and to master one that really clicks with your personality and your risk tolerance. So, could this be the one for you? Well, there's only one way to find out. Open up your charts, set it up, and start doing your own work.